Let's cross over to the other side of the Atlantic, where the U.S. stocks futures are pulsing ahead of Friday's open after the Dow Jones Industrial Average finished the previous session almost 200 basis points to the north. Right now, around 5:25 a.m. Eastern, Dow futures slipped 35 basis points. Right now, the DJIF is about 24,263. The S&P 500 next to that is around 0.20%. A deeper red than about an hour ago when we took those data on your screen. Then you have the NASDAQ futures now reading 7114.00, and that's 0.16%. They're looking like the U.S. markets looking for a red opening day as China responded to the fresh tariffs by imposing its own retaliatory levies on imports from the United States. Also keeping investors on alert is the latest round of non-farm payrolls data. 8:30 Eastern, we already have that. U.S. trade deficit falls 6.6%. We're looking at the numbers from the employment number. Unemployment figure in the U.S. just moved up to 4% from 3.8%. That's the biggest story today from Wall Street, and the market is already digesting that, despite adding more jobs north of 200,000 in the month we just finished. It's dinner time in Tokyo as we speak, so the Asian stocks bounced back to recover on the last trading day of the week, with most markets finishing the session higher. Investors were watching developments on the trade front as a deadline for tariffs from the U.S. and China take effect today. After losses earlier today, Chinese markets sprung back slightly, with the benchmark Shanghai Composite up about 0.5%. The smaller Shenzhen Composite, also in China, recovered slightly, rising about 0.5%, while the Hong Kong's main index, the Hang Seng, was up almost 0.5% as well. The Japanese Nikkei 225 was much stronger, 1.12%, keeping quiet and watching the fight between Washington and Beijing. Elsewhere in Asia Pacific, South Korea's Kospi rose about 0.68%, and in Australia, the S&P ASX 200 added about 1%. Let's come back home to the African continent, where Zambia is shelving projects that aren't almost completed and will renegotiate loans as the country seeks to contain ballooning debt and entice the IMF to restart talks on a support package. The IMF has warned that its southern African nation is at high risk of debt distress, while investors have grown skeptical about the amount of external loans Zambia claims it has incurred, saying it may be significantly more than the $9.3 billion in the news. Eurobonds of Zambia, Africa's second biggest copper producer, have been worst performers this year. And you can see the prices of copper, well, because of the trade tariff war between Washington and Beijing. So we'll move on to the Horn of Africa, where Djibouti has commissioned a $3.5 billion Chinese-built free trade zone, deepening ties with the Asian giant and helping the Horn of Africa country generate more jobs for its youth. Djibouti, with a population of less than 1 million people, that's just about 876,000, already hosts Chinese, U.S., and French naval bases, and the country also handles roughly 95% of the goods imported by Ethiopia, its landlocked neighbor with 99 million people. The new trade zone in Djibouti, one of the several new port and trade facilities, covers 48 square kilometers and was built by China's Dalian Port Corporation. The zone will be jointly operated by Djibouti Ports and Free Zones Authority and China's Merchants Holdings Company. Sticking with corporate news, Nigeria's largest cement maker and the largest with footprint on the African continent says it may carry out its long-planned listing of shares on the London Stock Exchange after Nigeria's elections in February next year. A number of banks have approached the company to arrange the initial public offering, although none has been mandated, and there has been no decision about how much the Dangote Cement plans to raise. About 15% of the Dangote Cement shares are listed in Lagos, where it has a market value of about 4 trillion naira. Dangote Cement is controlled by Africa's richest man, Aliko Dangote, who raised equity in London back in 2010. At that time, Goldman Sachs, JP Morgan Chase, and Morgan Stanley helped Dangote prepare a sale that could have raised as much as $5 billion before the move was abandoned. Meantime, the richest man in Africa, Aliko Dangote, says he plans to start selling gasoline, diesel, and aviation fuel as early as 2020 from his oil refinery near Lagos backwaters. The group executive director at Dangote Industries, Edwin Devakuma says the $10 billion refinery is said to be one of the world's largest and processes 650,000 barrels of crude a day, should be near full capacity by the mid-2020. Dangote is worth about $12.2 billion by the recent Forbes estimate, or according to the Bloomberg Billionaires Index, which said the refinery can transform Nigeria by weaning the country of fuel imports and generating foreign exchange through exports. Let's step back to Southern Africa, where Zambia has agreed to give First Quantum Minerals more time to complete its analysis of what the company might owe the Southern African nation after it was slapped with $7.8 billion tax bill. The mining company based in Vancouver is challenging the assessment from the Zambia's Revenue Agency, which claims First Quantum incorrectly declared imports for one of its two mines in Africa's second biggest copper producer. The Zambian government has audited major mining companies operating in the country, which includes Vendata Resources and Glencore. Copper accounts for more than 70% of exports in Zambia. That's battling to contain ballooning external debt and now looking to some safety net from the IMF. And this is from Kenya, where Bamburi Cement, which is controlled by Lafarge Holcim of France, has completed expansion work at one of its plants to raise its overall grinding capacity to 3.2 million metric tons a year. The cement company, one of the East Africa's biggest cement maker, began work on that project that cost 4 billion shillings last year.